Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes. Help me with your perspective of Oklahoma, given your experience in perhaps in other jurisdictions. What is the adoption of technology from your perspective like in Oklahoma? And I'm talking about everything from willingness to look at what carriers want to do to just reg tech, to like in terms of at the actual use of technology at the regulator. What's like your perspective, and then where does it need to go?
Well, number one, I think the department needs to embrace that,
right?
And because we're going to need that to even the playing field. If our companies that we're regulating are using AI and these types of things, we need to be using it to help make us more efficient. I'm all about making the department better, faster, stronger, whatever it takes to make it more efficient and handle our jobs better. So that is number one, is to look into that. In general, I think we're a little slow on the innovation side.
Okay.
It just seems like most of the carriers are doing the same thing they've always done.
Right.
And I don't understand why we're not getting more innovative in that area. Now
Just in the industry?
Yeah, in general.
Okay.
In general.
Yeah.
I mean, why are we still selling things the same way
Yeah.
as we have always done it? I'm looking to see more cutting edge stuff. And I would like to see Oklahoma to be that area where we can do more cutting edge and be up front versus waiting to see what someone else does and then doing it 10 years later.
Yeah.
I'd like to see that more here.
Yeah, it's funny you say that. I was just talking to somebody about how the insurance contract hasn't changed in 100 years. I mean, it's legit. It's essentially the same contract. Matter of fact, still I was looking at a homeowner at HO3 policy still talks about exclusion for tapes. It's like, who has tapes anymore? It's just like we have to actually write that into the policy, right?
Yeah.
And, so it's really fascinating. And then enter in now finally some new insurance contracts, some of which I think about for Oklahoma. And when I think about like parametric insurance and taking off in Florida, especially for when you start talking about high deductibles, I mean, is there room for those types of kind of new policy instruments here?
That's where I think we could really make again, going back to the sandbox.
Right.
Let's try this stuff. Let's try the parametric. Let's try the stated value.
Yeah.
Hey, we're going to pay $10,000 on your roof, and that's it.
Right.
There's no fight.
Right.
There's nothing. You know exactly what you're getting, and
right.
And disclosure and transparency is going to be huge in those types of situations because the consumer needs to know what they're getting. Mm-hmm. But I think they know more about what they're getting with that than they would another one. So I think those are all opportunities, or even peril exclusion. Mm-hmm. I saw a policy example. It broke down. The person was paying $8,000 for their premium on their home, 5% deductible, scheduled roof, so you depreciate the roof, and then they had it broke out by peril. Hail was $6,000 of that $8,000.
Whoa! But
they have 5% deductible scheduled roof,
right? Which
means that even if they got hit, they're basically getting nothing.
There's no coverage.
But the majority of their premium is for hail,
right?
Which is the roof, right? I mean, sure, there's fence, there's.
Yep.
I mean, garage door maybe. But
the money's in the roof.
But it's all. Yeah. Most of that should be going to the roof. So it's like, what am I paying for? Exactly. So, or reverse it. If the insurance company, the carrier, doesn't want it, because that, to me, my dad he had a restaurant, and he sold these sub sandwiches, and he started hating making them. He just hated it. So he priced them like ridiculous, right? So no one would buy them.
Right.
And if they did, it made it worth his time.
Right.
They were like $10, $12 back in the 90s. It's ridiculous. So this is what it looks like to me. Mm-hmm. You're paying so much for something that you're getting nothing, no value for it.
Right.
So don't buy it. Okay, well, if that's the problem, then just exclude it. Mm-hmm. Exclude it. We're not going to pay for hail.
Yeah.
Here's the rest of their policy. It's super cheap. It's like $1,000 or whatever it is. But that has to be very clear to the customer. Mm-hmm. And then on the flip side of that, I know there's carriers that offer just that.
Right. Yeah, making room for that.
It's just there's not very much of it. Right.
Yep.
So it's kind of piecemealing this stuff together. Some carriers are okay with that risk, some are not.
Right.
So let's find a way to play together and get the customer taken care of. Or there's deductible insurance as well. I mean, it covers the gap.
That's right.
I've seen it in commercial, and I know it's out there for personal. It's starting to develop. Right. So there's different things we can do.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.